Reversal of roles, S&P 500 underselling pressure while the PSEI unexpectedly rebounds, leading the region. Let's look under the hood. My name is Den Slim, and welcome to another episode of Monday Market Outlook. Nvidia dropped a strong double beat last Thursday, but instead of rallying, the market flipped. The S&P 500 fell 3.5% from its intraday high, the biggest tech drop from peak to trough since April's Liberation Day. Now, earlier last week, the first jobs report since the shutdown was released with mixed results. The delayed numbers show non-farm payrolls doubling expectations with 119,000 new jobs, but unemployment still jumped to a 4-year high of 4.4%. So that's confusing data, and traders don't think it's weak enough for a guaranteed rate cut in December, with probabilities further dropping to 35.4%, again down from 44 last week and drastically down from 98.1% last month. Now, last week we also saw crypto crashing 10%, forcing some traders to sell equities just to cover Bitcoin losses. So we saw tech weakness, macro confusion, and crypto stress all hitting together. But the US markets found relief after Federal Reserve Bank of New York President John Williams said he sees room for US Central Bank to cut interest rates again in the near term as the labor market softens. And just like that, the probabilities of a rate cut doubled to 71%. Now remember, Williams' commentary carries a lot of weight because he is the vice chairman of the FOMC and one of what's unofficially known as Troika, right? The group of leaders in the Fed, including Jerome Powell and Vice Chair Philip Jefferson. And we are back suddenly to an estimate of 3.75% for the US, which is good news for the Philippines. But let's go back to Nvidia. I mean, yes, they reported an insane 57 billion in sales in just 3 months. But the market was not impressed. Remember, Ray Dalio is already warning that we're 80% into an AI bubble. And the reason why the market sold off can be seen in Nvidia's financials. So Nvidia here had a 57 billion sales for the third quarter. Very, very impressive. But Nvidia also lagged 33.4 billion in accounts receivable, more than half of the revenue not yet collected. So if chips are flying off the shelves, why isn't cash coming in? And that raised real questions, especially with analysts pointing out the circular ecosystem, right? Just an example here. I mean, this is not a complete picture, but just an example. Nvidia invest in startups like Scale AI, Lambda, CoreWeave, Perplexity, Wave, and those same companies use the capital to buy Nvidia chips. So revenue growth looks massive, but it's your own money just looping back into yourself, right? So while detractors are saying Nvidia's PE is not at dot-com bubble levels compared to hundreds during the 90s, the worry now is the quality behind that revenue. The PE ratio is price divided by the EPS. Now, EPS is 4. And if earnings is just looping back, then the real number may be way lower. And the PE ratio could suddenly be, in bubble territory. With what analysts flag as possible, right? Accounting tricks, right? Accounting magic. Hopefully, this can give you a better idea behind what the AI bubble talk is about. And this has been weighing on the S&P 500 all through last week. But back home, look at the PSEI from last to second. Congratulations, right? The local markets led the way, rallying 7.39% with the rest of the world pulling back. Now, the index went on a rampage last week with a one-day window of opportunity last Tuesday to ride the wave, almost hitting 6,000. Now, index heavyweights led the charge, SMPH, BPI with double-digit rallies. BDO, Metrobank, Ali, Aboitiz Power, SM, JFC, Converge, GT Cap, even SMC. joining the party, no? And as we mentioned, if the index was going to rally, it will be the blue chips who will lead it. If you look at top performing stocks here, they're mostly index names that are very familiar to us, right? Now, while the PSE rose last Friday, it was local funds nibbling at the markets, with Fridays having the most net foreign selling at almost 2 billion. Now, here were the top foreign bought last Friday, AREIT and Meralco, but mostly it was foreign fund selling of blue chips. And what's concerning here is, while the weekly numbers show net foreign buying overall, right? Foreign funds, most days, no, foreign funds continue to sell off, especially the blue chip names. So let's look at the charts. The PSEI broke its 4-week losing streak with a global leading, I would say, 7.4% rally, ending the week almost exactly along the critical resistance here at 6,000. So looking at how the support levels stack up, we can see here some key areas defined, no, way back during the pandemic. See here, like, way back here, there is a possible gap fill. This is the low at 5,400. We have the weekly candle closing here at 5,525, and the monthly candle around 5,620. So last week we were looking at how the markets would react to the support stacked along this area, and it was a pleasant surprise that well, we almost filled the gap before bouncing back strong last Monday. The first bullish sign was the breakout from 5,750 retest, then bounce, no, very quick bounce here. Next breakout on resistance here at 5,834, and then the gap fill here eventually, and the breakout of the 5,930 resistance. So we can delete this gap. So this becomes support. This also becomes support. This also becomes support. So far, so good. Right? Things looking much better than last week. Hopefully, you were able to watch the reel I posted last Monday, where I said, "Oh, it's time to buy," right? Now, while 6,000 is a good even number and a good psychological resistance, no, the markets could actually push further into this area with a heavy confluence of resistance. We have the consolidation area here and the 100-day EMA. But if this is the peak, and if we do a Fibonacci here, we can see that the pullback levels align with the new support areas here at 5,837 and 5,737. But if markets continue to around 60, 70, right? So we have the zero point 0.5 fib aligning here with the 5,837. So we also have the 5,900 and the 5,750 levels. No? So the key this week would be how the markets navigate along these levels. But with the recent rally just fueled by local funds, no, the question here is, will foreign funds see this as an opportunity to sell the rally, or will they finally come in? Because while we've had a good week, remember overall that the market has been trending downwards, right? And we can see here instances where the markets have hit the 50-day EMA, 1, 2, and the market sold off to even lower levels. So hopefully, we can see the support levels here hold in the coming weeks. So let's look at some index names here and see where we are. Like, most of the names have been selling off for a long time. So this is the first significant rally, and we are seeing most of these names hitting significant resistances. Ayala Corp, resistance here, 20-day EMA. SM surpassed 20-day EMA, 50-day EMA, but a very strong resistance here. It was a strong support, now it's strong resistance. DMC, the same story. GT Cap, the same resistance. LTG holding on to the 15 peso level, probably helped by the dividend announcement. Ayala Land also almost hitting resistance here at 21.45. SMPH also hitting resistance here at 2280. RLC hitting resistance 1560, but we flagged this as a possible buy last week. Congratulations if you were able to pick up some shares. REITs moving along very slowly. A REIT RCR rallying towards Friday. C-REIT also recovering from the sell-off the previous week. The same with banks. BDO almost hitting resistance here at around 133.9. BPI hitting the dynamic resistance here at the 100-day EMA. Metrobank almost hitting resistance here also at 68. Gold issues did not perform well. And this is why we have to wait for a confirmed bounce, because if it doesn't bounce, I mean, it could go further down. And this is what happened with gold issues. Apex Mining, Felix Mining, OGP, all breaking through their support levels. So still some short-term weakness for the gold issues. Not yet a good time to enter. Looking at the consumer stocks also, same, almost hitting resistance here. Gap fill resistance here at 204. Pure Gold overcoming this resistance, pulling back at 39.25. Looking good for Pure Gold. Next resistance would probably be here at around 44.10. Even Monde performed very well, but hitting resistance here at 20-day EMA. Wilcon, same story. CNPF struggling to break through the 38.95 level here for CNPF. Aboitiz Power, we featured this stock also last week. Congratulations if you were able to pick up some shares. A breakout of this level here. Very, very strong rally for Aboitiz Power. Also, Manila Water, we were flagging this as a possible double bottom. Measured target here now is at 39.50 at least. So, Maynila doing pretty well after the initial sell-off, closing at 15.50. The telcos looking much better actually. Globe forming a flag formation here. Immediate resistance here at 1690 and 1753. Even PLDT, doing pretty well. The next level of resistance, 1328 and 1400. Converge, surging all the way last week to 1450. The next resistance here would be at around 1536. Most of the issues hitting their resistance levels. Only the telco sector seems to still have a bit of upside coming into this week. As we wrap up earnings season, let's look at the latest numbers. The index names actually delivered 11.1% earnings growth for the third quarter, and even 8.1% year to date, which is much stronger than how the markets behaved in the past months. And look at this. I mean, companies have already hit 75% of their full year earnings targets, and with one quarter left to go. No? So corporate Philippines still quite healthy despite the noise. But year to date, we are still one of the worst performing markets. And at this point, if we look at this chart, the Philippines is now the cheapest market in the region. And we are trading at just 8.2 forward PE, even though we still have positive EPS growth. Most of the PE ratios here, 14, 13, 12, right? But EPS growth, 9, 7.5, 6.6, even negative growth here, but they are trading at 14 times PE. And it gets more interesting here, right? For every peso you pay, the PSE gives you more earnings to growth than anyone else in the region. And meanwhile, some markets with weaker or even negative growth are trading at nearly double our valuation. So if you're looking for value, the risk reward here is actually one of the best around. The market currently is priced as if we are in the middle of a crisis or a financial meltdown. But we are not, right? We don't have a banking crisis. We don't have sovereign credit issues. We're not in a recession. We are not in a negative earnings cycle. Earnings are okay. The economy is stable, and there's really no systemic crisis brewing. It's really just market sentiment that's bad. There's nothing wrong with fundamentals. And I've been thinking pretty hard the past week. I mean, when we talk about light at the end of the tunnel, what does that light look like? No? So I've listed some potential catalysts for the Philippines or some possible re-rating triggers for 2025 to 2026. So, of course, we want to see a resolution to the flood scandal investigation, rate cuts from both BSP and the Fed. So BSP has said that they might cut rates in December. The Fed also pricing in a 70% rate cut in December. Inflation stabilizing towards 3% for next year. November inflation could come in at 1.4 to 1.6, but that's coming from a high base. Let's see if the numbers improve next year now that we're coming from a low base. Peso strengthening back to 56 to 58. Remember, we are looking forward to a more dovish Fed because J. Powell's term will end in 6 months, and we are sure that Trump will replace him with someone more dovish. Remittances hit record highs. That could be a good sign. So far, the cash remittance report last week hit a 5-month high at 3.7%. Maybe the election spending cycle will help things along, but that's farther along the road. And hopefully, these triggers would result into a rebound in foreign fund positioning. Let's see if some of the mega project executions will happen. I mean, SMC surged last week. Maybe there's also light at the end of the tunnel for their infrastructure projects and corporate profit upgrades. As long as our companies continue to grow, that should be good. I mean, we don't even need everything to go right. Just a few catalysts could push markets back to fair value, and we are looking at around the 6,300 to 7,200 range if we're talking about fair values, which represents to around 20 to 40% upside from the depressed index levels. So this week will be crucial. Most likely the resistances will push the markets back, which is okay. I mean, I think the market should pull back at this point, ideally to around the 5,800 or 5,750 level to give more investors the opportunity to buy the dip and for price action to form a higher low. So, I mean, this is what I've been advocating in past episodes. Just stay patient. Take time to evaluate if the stocks you're holding have solid fundamentals. I mean, nobody knows when the markets will bounce back. Maybe the worst is over. Maybe it's now. Maybe it is just the start of a long consolidation and the markets could find some footing before we continue the rally, or hopefully investors starts to see the value in the markets and we start to see foreign funds coming in. But worst case scenario, and it's always a possibility, again, the market is still trending downwards. The market still can sell off to lower levels. At this point, experience tells me and the technicals tells me to lighten up, to sell on rally. But let's look at the price action coming into this week. We do have some potential catalysts. Breaking news from last Friday, tilting the odds of a rate cut from the Fed is one. Number two, the issuance of warrants of arrest, no, is a step in the right direction to resolve the flood control scandal. Hopefully, this could help stabilize the markets this week. So that's it for this episode. Please like this video if you found the information useful. Please subscribe to the channel for more updates. And again, good luck on your trades. Please manage your risk accordingly. And I'll see you again next week.